how I made $10,000 in 2 hours. It's a catchy title, right? But the knowledge behind how it happened is a lot less flashy. So sit down, take your cup of coffee, take a deep breath, breathe in, hold it, and breathe out. And sit down, take a notepad, and watch diligently. All right, so we have Euro over here in a downtrend, a strong downtrend. You have large bearish daily candles. And as we know, the market moves in a range, and then a trend, and then a range, and then a trend. And the traders who try and catch this trend get chopped up in this range, turtle souped, and then continued. Right, so after a sharp move, a sharp decline in price, you expect a range. Right, that's what happened. That's the basis of the markets and how they move. That's the basis of all concepts. Right, power of three: accumulation, manipulation, distribution, range, turtle soup, trend. The entire market can be summarized in range, turtle soup, trend. Range, turtle soup, trend. Right? Range, turtle soup, trend. Range, turtle soup, and a trend is coming. So, the idea was a scalp, right? So within the daily range, because as you know, or you don't know, because you've been following the wrong people, you have to decide beforehand, before you trade, you have to decide, what are you? Are you a daily range trader? Are you a 4-hour range trader? Are you a weekly range trader? And if you don't know what you are, then it's a problem, right? Because then you're prone to making rash, unenlightened decisions, right? So first, decide, what kind of trader are you? Are you a scalper? Are you a swing trader? Are you a position trader? What are you? And based on that, you trade, right? In this instance, I was trading the 4-hour candles range, right? Now, what does that mean? Now, this is a bit more dense and advanced than normal, so bear with me and focus, right? Pay attention. If you're doing something else, stop and pay complete attention to this video. And after it's done, you can go and do what you want. All right, so the daily candle is divided into 6 4-hour candles. All right, you have 1, 5, 9, 1, 5, 9. All you want to do is catch a 3-candle model in 3 of these 6 candles, right? If you are a daily range trader. Now, let's put the 15-minute to see the daily PO3. All right, you mark Monday midnight, and then you mark Tuesday midnight. Right, so before the day even opens, I have this marked. So I'm working within this time zone, right? Opening time, opening price, and the previous highs and lows. That's all I care about. All right? So you mark previous highs and lows. And you watch and wait. All right, you mark the wicks and the bodies. Because all that ever happens in these charts is the candle opens, the candle opens, it takes a previous high, and then it dumps if you're bearish, right? And if you're bullish, make this white. If you're bullish, then all that happens is the candle takes a previous low from a previous candle and it rallies. That alone should give you food for thought and give you something to look back into the charts, right? So using that in mind, you have the open, right? You have the highs and lows marked out. And then you wait. Now, as we know, or we don't know, time is more important than price, right? So the specific times I'm looking to trade are around 3 to 5 a.m. and around 8 to 10 a.m., right? At those specific times, I'm looking for the formation of a swing high, right, on the 15-minute time frame. Swing high and then an expansion. Right, so you go, open the diagram, open, smack into an old high, and decline, right? Decline. Now here's a question. Why did I not trust this market structure to shift and be valid? Right over here. I'm pretty sure a lot of you got wrecked buying above this high. Well, I did the exact opposite. Why? Right. I mean, at first sight, it looks like a valid market structure shift, right? But it's not. Because, why? Because market profiles, right? So you have the market breaking lows and rejecting highs. Right? So they're showing no respect for the lows, disrespecting lows, and using the highs as turtle soup. Any pop above a high in a bearish market is a turtle soup, right? Not a market structure shift. So usually, I look to hunt from 8:15 onwards, right? 8:20 is usually a false move, right? A Judas swing. So I knew as soon as I saw this that it's a fake move. Why? Another reason is because there's an important low over here, right? And the lows that break the highs are important draws on liquidity, right? As you know, price moves for two reasons only. It moves to attack a high or low, or it moves to rebalance an imbalance, right? So when you're trying to decide, when you open the chart and you try and decide where's it going, then it's either going to attack an old high or low, or it's going to rebalance an imbalance on all time frames. Excuse me. So that's the target. That was my draw on liquidity. Range low, range high. And usually before the target is met, there's one last turtle soup. Before the higher time frame target is met, before the draw on liquidity is met, there's one last turtle soup. That is the kiss of death turtle soup, named by me. Now, within this entire framework, right? So bearish market profile, open, range, turtle soup, high created during London, and a nasty dump. Right, so it's a strong bearish trend. Another note is that it's a Monday, right? And the pattern traders, the ICT parrots, they don't trade Mondays, which is incorrect. you trade Mondays, keeping in mind that Monday is going to be a choppy day, right? It's usually going to go up and down, right? Now, this being the final turtle soup before the target, I then go to the 30-minute time frame. Move all this. Because when I'm trading, I have nothing open, right? I have a naked chart in front of me. 30-minute time frame. You then go and mark the candle's high and the candle's low. And this is a method which you can use to trade any time frame. This right here, lady and gentlemen, right? Because trading is a male-dominant sport. This right here, if you've reached this far, this and focus, this is the key to the charts. If you can frame 4 of these a week, then you can make a pretty good living out of trading, right? Because trading is not about predicting every single move. It's about picking your shots and picking them wisely, right? So you wait for the perfect shot and you attack. You identify and avoid low probability conditions, and that's a topic for later, and you avoid them. At the same time, you identify high probability conditions and you try and participate in them, right? To identify low probability, avoid, and identify high probability and participate, capitalize. All right, so you have your, it took the high. Candle 1, accumulation. Candle 2, manipulation. And I've said before that 8:20, 8:30 is the time for a manipulation to happen. Because here's another topic, which I'll touch on right now, but only a touch. And don't ask me to go any deeper, right? But price moves during certain times faster than it moves in other times. Right? I'll say that one last time. And no, I won't explain any further. But understand that price moves during certain times at a rapid, predictable pace and direction. And other times it accumulates. It chops around. Right? One of those times is 8:20. Right? So 8:20 onwards, I'm looking for a turtle soup. I'm looking for a massive move. Candle number 1. Accumulation, right? And over here we have come to the section of the video where I explain the 3-candle model. The 3-candle model is basically, very simply, candle 1, candle 2, and candle 3. Candle 1 is the range, one specific candle. Candle 2 is the turtle soup. And candle 3 is the expansion classic buy or classic sell candle, right? Now, I don't care who says they taught this before or who says they understand it. They have no idea about the true essence behind this because until last year when I came on Twitter, nobody knew and nobody had ever talked about candles being ranges that are either turtle souped or broken out of. That's an open challenge. Now, so we're looking to trade candle number 3, right? Obviously, When you're more advanced, you can trade candle number 2. But candle number 3 is the smooth sailing. Right? It's the easy candle. It's a quick candle. Right? So based on this, I'm looking at this candle over here. Candle number 1, accumulation. Candle number 2, manipulation. And then what you do is buy above the open of candle number 3. Right, so you mark candle number 3. You wait. And as soon as you see this candle right here popping above the high, you sell, targeting the third candle's low. And that's it. That was the trade idea. And of course the target got hit as expected. Right? An even deeper look on the 1 minute time frame. All right, you have the 8 to 8:30 candle right here. To 8:30. That's one specific timed range. Let's give it a color. Gray. And then candle number 2 is the turtle soup, usually a choppy candle, right? This candle is for the experts only, right? Which is why I traded it. And then based on this timed range, you're going to attack candle number 3, right? And notice how this frees you from any pattern trading, right? Candle 1, candle 2, and this smooth sailing, sell above the open. I had someone ask me about the entry. The entry is right here. As soon as you pop above the open of the third candle, you sell, and that's it, to the target. My trade was this. It was the 5 minute candle. As soon as you close below this specific candle, that was my entry right here. And a quick 10 pips. 10 pips a day. Keep the 9 to 5 away. All right, so anyway, candle 1, candle 2, candle 3. Now this also frees me from, I don't care about the previous price action, right? I only care about these 3 candles. Candle 1, candle 2, and candle number 3. The amateur is looking at this market structure shift, but another note is when there's a gap above a high or below a low, then that is a high chance of being a turtle soup, right? It is in price action details. And another thing is, it's very unlikely that we bottomed in this formation. Usually what happens is a range, right? And you see this, right? I like to see chop. A lot of chop, and then the chop gets solved by a turtle soup and an expansion, right? As opposed to a smooth move. I don't like that. Another thing is, that gave me confluence, is the 4-hour low of the rejection block. And this video is packed with goodies. Not sure if I'll upload it, and we'll see. You have the rejection block, and then you have the low of the candle inside the rejection block, right? If you have a rejection block, then normally what'll happen is it'll hit, right? And the rejection block, for the uninformed, is simply an order block with a long wick. You take the closing price, right? So if we haven't hit this low, then I'm suspicious of a bottom to form. Another thing is, you have this, the candle looks like this. Usually when a candle closes like this, then I'm looking to buy in this portion of the candle, right? Preferably with the 3 candle model, right? However, in this case, this low wasn't hit. It's an important low. It's the low that broke the high. And backtest those. See their importance. So I'm expecting it to get hit. And for a 3 candle model to form on the 4 hour. So you got that. Trade number 1 was here. Trade number 2 was the bounce higher. Right, so in summary, if that was a mouthful, the idea was this. The 3 candle model. Candle number 1, over here. Candle number 2. And throat is killing me. Candle number 2 and candle number 3, right? Candle number 3 is usually going to be the most easy, the smoothest expansion candle, and this is one of the methods of how to catch expansions, is to trade the candle after the candle of the turtle souped, right? 3 candle model. This is all I care about, these 3 candles. Candle 1, candle 2, candle 3. It's a timed range, and it's a timed expansion, and it's a timed low of the day, right? And again, what happened was another market structure, by the way, works within this framework, right? If I haven't touched on that, you have 1 minute. The only reason market structure is working, right? You got this breaker here, for example. What's a breaker? The breaker is the down close candles before the turtle soup. Usually, and this is something again for your backtesting, one of the ways of getting almost zero drawdown trades is by marking the breaker's closing price. Like this right here. Never ceases to amaze me how it gives you almost zero drawdown trades. Right? Truly perfect, these concepts. So high, low, higher high, 3 drives, 1, 2, 3. The market tops in 3 drives patterns, and bottoms too. All right, so you got 1, 2, 3, turtle soup, failure swing. So the people who sold up here, right, are getting stopped out, they're getting scared. And then after they get stopped out and new buyers are enticed, then the market dumps. Right? Breaking through the low that broke the high. And again, I can't emphasize this enough. Backtest the low that broke the high. And its role in either shifting the trend or continuing the trend. Right? So close below. Confirm bearishness. You go here. And dump. All right, so instead of blindly pattern trading, in summary, everything must feed back into the power of 3. Everything, right? And rewatch this and rewatch the 3 candle model and back test the 3 candle model, CRT. Right, my invention. And frame your entries within the 3 candle model. And that's your homework. Your homework is to back test the 3 candle model. keeping in mind that it has two options. The range, the candle is either going to be turtle souped or broken through. If it's broken through, then there isn't three candle model. If it's not broken through, then turtle soup. Candle 1, accumulation. Candle 2, manipulation. Candle 3, turtle soup. Candle 3, expansion, excuse me. And one last pointer I'll give is notice the importance, and backtest and forward test, the importance of the 5 a.m. candle and its relationship with the 9 a.m. candle when it comes to the 3 candle model. There's a lot more. I can talk for hours and hours and hours discussing the intricacies and details, but this is pretty packed for one video, especially a public one, right, on Twitter. So happy studying. Hope you enjoyed. Hope you found it insightful. I hope you and your mentor, and all the mentors, and I say mentor lightly, hope you all found it insightful. I wish you good luck, good trading, and see you in the next one.